Hi, this is Kevin Davey of KJ Trading Systems, and welcome to the latest video in our How to Pick a Winning Trading System series. Just as a reminder, this is the same process I use to develop and pick winning trading systems. And for 3 consecutive years, I was able to achieve 100% plus annual returns in a worldwide, real money, real-time trading contest. But first, a quick disclaimer that with futures you can lose a lot of money, so don't trade with money you cannot afford to lose. And watch out for hypothetical results, because hypothetical results were created with the benefit of hindsight and they may not work going forward, and all trading decisions should be your own. Okay, now we're on to step 3 and how to pick a winning trading system. In step 1 we looked at objectives. Step 2 we did preliminary research, and in step 3, which is this video, we're going to learn about doing due diligence. Now, what is due diligence? Well, when companies buy other companies, one of the things they perform is a task called due diligence. It's where they take a detailed look at the business and the numbers and determine if they really want to buy it. So for picking a winning trading system, what you want to do is you want to take your checklist and your objectives that you created earlier. Hopefully you created those. If you didn't, go back and create them. And then you want to look at each point in detail. You want to ask your broker, the advisor, you want to look at the websites you're looking at and get those questions answered and fill out those checklists. And you want to double check all numbers and all claims. And basically, you want to get a comfort level that you're going to be okay trading this system, that you're going to feel good when you're done. If you don't, then you shouldn't be trading it. So, just as an example, I had created some likes and dislikes earlier on some of the systems that I was interested in. So what I would do is I'd go through my likes and dislikes and basically say yes or no. Does the system I'm looking at, in this particular case, it's one of my systems called E-mini Open Cycle, which is offered at World Cup Advisors. Does it trade overnight? Yes. Okay, well that's what I wanted. Does it trade one contract? Yes. Was it created by an experienced developer? Yes. So the point is to go through each one of these and determine yes or no, does it meet your objectives? Now it was a little bit easy for me because when I create a system, I know what my objectives are and I create the system to meet my objectives. And these are some of the points that I always look at. I want to make it simple to take a signal. I don't want to hold trades over the weekends. I want a very wide stop so the random noise during the day doesn't get me cause me to exit with a loss. I want it to be tested over a lot of data, 10 years of data where it's shown to be successful. I don't want to use a lot of parameters, and that's probably something you don't want in a system. A system with 50 parameters is probably curve fitted and it probably won't work going forward. There are exceptions, but for the most part that's true. And then one of the other things I like in a system is where it occasionally gets what I call a tune-up, where it re-optimizes some of its parameters to stay in touch with the market. Now that's me. You'll have a different set of objectives and likes and dislikes, and the important point is, again, have them down, and when you find a system you think you like, check them off and make sure they fit. So the due diligence phase, you want to ask a lot of questions. You want to ask general information about rules for entry and exits. Of course, nobody's going to give you the exact rules, but at least you can get an idea of what you're looking at. For example, you might like trading with a trend, and the system you're interested in is a counter trend system. It's not going to work for you. Even if the return's good, you're eventually not going to like it. You want to find out about the developer, whether it's a black box or a signal that you're subscribing to. You want to see that you have a successful developer behind it, because if you don't, chances are this person doesn't know how to make systems. So again, these are just some of the questions you can ask. The next point is you want to recheck in all the numbers that you have up to this point. and you also want to see how it fits in your portfolio. So for example, if you already have a trend following system in the mini S&P, do you really want another one? Maybe not. Maybe you want a counter trend system, something to balance it out. One of the other things you can do is you can go to the NFA, which is the National Futures Association, or the CFTC, which is a government commodities website, and check for references on the particular developer or broker you're looking with. Not everybody's registered with this website, but the ones that are, you'll be able to see if they've had any violations against them. You can also Google the developer. See if who you're dealing with is somebody you really want to be dealing with. So, just to give you an example, I checked some numbers to my objectives on one of my systems that I created, and you can see here that I look at both the hypothetical results that happened in the past, and again those are going to be sort of idealized, and I wanted to make sure there was enough profit per year, and then I had a cutoff point of when I knew the system went live. I also want to see if, since it's gone live, it actually meets my objectives for average trade and winning percentage and Sharpe ratio and those kind of things. So again, it's just going through numbers and making sure it fits you. One of the biggest things here is with drawdowns. We've talked about risk in some of our other videos, but I liken it to the little mirror on the side of your car where the truck or the car behind you looks very far away. That's the way drawdowns look. Always remember that drawdowns are always larger than they appear. So if a system had a 10% drawdown in the past and you think, hey, that's no big deal, chances are it's going to be a lot worse than you think, even that 10%. One, it could get bigger. It could, just because it was 10% in the past doesn't mean it won't be 20% in the future. But the other thing is that 10% is a lot of pain, 20% is a lot of pain, and when you look at it on paper it doesn't feel that painful, but in real life it is. So that's something to keep in mind, is the drawdown. So the biggest pitfall in doing this due diligence is if you sign up for something right away without doing this in-depth analysis, or where you still have some questions and still don't feel that comfortable with the system. Because if you don't feel comfortable at the first sign of trouble, which is the first drawdown, which eventually you're going to have with every system, you're going to just lose faith and you're going to drop the system. So make sure you do your due diligence and do your in-depth analysis. And that wraps up the third video in our series on how to pick a winning trading system. And again, visit my website for more information, or if you have questions, send me an email. And thanks for watching.